All right, hello. Welcome back to another YouTube video. First and foremost, I will say thank you for 100 subscribers. This video will be a little bit longer than the usual one, but I'm not really caring for the average view duration because in this video I'm going to be dropping a lot of stuff here. So if you're willing to learn and willing to listen, then you'll watch the video. I'm not going to be teaching anything. You could go, I put the timestamps, of course, in the beginning of the video. If you just want to skip straight to me calling price live, or skip straight to me explaining and breaking down my live executions, then you could go to that. But basically, in the beginning right now, I'm going to not teach, but I'm going to tell how I trade turtle soups. Again, this is not financial advice. I'm not a financial advisor, but without further ado, let's get into it. So when I trade turtle soups, there's mostly, because if you really break down your entry model, all your trades, all your entries follow turtle soup. So I'm just trading the first thing. So when I'm looking for a turtle soup, there's four things I'm looking for in a turtle soup. I am looking for either a market maker model. That's the first thing, right? A market maker model, and that market maker model is going to sweep some form of liquidity, right? But before we even get into that, let me list what is going to validate our turtle soup, right? So when I'm trading turtle soup, the first thing I'm thinking of is high time frame bias. High time frame bias is where is price going to go, right? Then second thing, I'm thinking of the high time frame narrative. Why does price want to go there, right? And we're gonna delve into some chart examples. We're gonna delve into yesterday's price action because it was there as well. But that's the first thing that constitutes all the turtle soups, right? High time frame bias, high time frame narrative. Then time, right? Third is time. Is it the correct time for the turtle soup? Is it correct time for the manipulation? And I'm going to be diving into it. I'm not going to be teaching it, but this is what constitutes whether I'm taking a turtle soup trade or not, right? So now we have this right here. Uh, Let me see if I can break it down a bit. We have this, a market maker model, right? That's the first thing that's one of the first things I'm looking for why I want to find my turtle soups. One, an MMXM. An MMXM, the low risk entry or the smart money reversal is going to sweep some form of liquidity, and that is where I'll be taking my low risk entry for the turtle soup. Two, ranges. Every candle is a range. I'm not going to go into what ranges are. You can watch that video from Kiowa, but I'm going to identify a range. And if there's an identifiable range with key levels being, depending on time frame, you have to sync it with time frame, but usually 1 hour, 4 hour, 15-minute PD arrays, when they overlap with each other, 90-minute PD arrays, 20-minute PD arrays, 2 hour, 30-minute, stuff like that. Those are your key levels. We're going to be looking for a sweep of the range low or high, which I will show. And I'll be using that as a turtle soup. My third one is the classic AMD, right? So we have AMD and accumulation, manipulation, that being the turtle soup, and distribution. And you can find those almost anywhere, but that's where you sync it with time. Fourth is basically anticipating the breaker. And when you're anticipating that breaker, I'm going to call it ABS. If you watch Aiden, you know. Anticipating the breaker. When you anticipate the breaker, there's some form of turtle soup, and you're just trading the turtle soup. I don't use that as much, but what you would notice is that all four of these can blend in with each other, right? So let's say we have a range. We have a high time frame candle, right here, and in there, right, we have a range. As you can see here, our original consolidation is right here. Then we go lower, and we tap into a high time frame PD array, sweeping that liquidity, right, before trading higher. Now, as you can see here, this is a market maker buy model, right? But not only is this a market maker buy model, it's within a range. So we range from here to here. We sweep the range low, right here, which is also anticipating the breaker to form, right? And not only is it anticipating the breaker to form, but it's accumulating, manipulating, and then distributing. So all of these can, of course, overlap. And what I like to say is it's like you're adding buffs to your sword, right? When I look for these, it's like I'm adding buffs to the sword. As more of these confluences that I get, the more high probability it's going to be. Now, we don't trade price patterns. So all of these means nothing if we don't incorporate time into it. And how I trade my turtle soups, right? Here is what I'm looking for. The power of 3 is very important when I'm trading my turtle soups. It's very important. All I do, I want to make sure that I'm buying below the candle's open and selling above the candle's close on a high time frame candle and a 15-minute candle if I'm scalping, all that type of stuff. So I'm going to put out the opening prices that I usually mark out for where I want to buy above if I'm sell above if I'm bearish, and buy below if I'm bullish, right? We have the 6 o'clock p.m. candle. I don't use that as much, but that is the opening of a new daily candle. You have, of course, your classic midnight open, right? Then you have your 8:30 kill zone open. You have your 9:30 equities open. You have your 9 o'clock candle, right? Because that is the 1 hour candle. You have your 10 o'clock candle, new 4 o'clock. That's the new 4 hour open, right? So a new 4 hour candle, you want to mark out 10 o'clock. For PM, usually 1:30, right? 1:30 p.m. 2 o'clock, because that's also a new 4 hour candle. And then 3 o'clock p.m. because from 3 to 4 is the final hour macro. So I just found it, important. That's what I found to be important. And if I'm using quarterly theory, 2 market session open. I also like to look for sweeps within macros and usually around times where judices should form, right? So if I'm entering off a soup, it's depending on price. There's my entries off soups consist of 4 models, which I'm going to get into. But for instance, let's get into an example where it's 9 o'clock, right? So we have our 9 o'clock candle. Let me see if we can get that out right here. Right? We have our 9 o'clock candle. And with this 9 o'clock candle, from 9 to 10, we can get a classic accumulation, manipulation, distribution. In fact, I think it's better that I show a live example, but first I'm just going to show this one, right? Let's say we have this is the 9 o'clock hour candle. For power of 3, we always want to buy below our fixed open. So that's our open, right? And during our open, we usually accumulate, go into key level, distribute, close, fix. It's not always going to be this. This is like a doji candle. So actually, let me show that right here. This is your classic buy candle, right? I'm not going to be teaching you guys that. You guys can learn that for yourself. But the way I incorporate it is I'm going to be doing accumulation, manipulation, right, with the correct narrative and bias. Turtle soup right here, distribution. Now, it's better to show a live example. So that's what I'm about to show right now. If we were to go into Friday's price action, right? Friday's price action. Let's see right here. And we had this huge sell-off, right? We had this huge sell-off because news released at 4, not economic calendar news, but we just had, news that released at 4. Asian low swept. This was our dealing range. We need to, in order to sell again, we need to reach an equilibrium. Like I said, you should know that. I'm not here to teach you that. How I'm trading turtle soup in this is if you look right here, 8:30 we had NFP. in order for us to continue higher and we have these news, we would want to see this wick filled. NFP, long wicks are gaps, and NFP can provide that. So if I were to go and I want at least equilibrium of that gap filled before we go higher, right? So how would I trade this? That's easy. You have your 9 o'clock candle, right? And if you were to mark out 9 o'clock right here, you would see that we would start to accumulate, right? We were accumulating orders right here. We filled about 15% of it. And I'm pretty sure actually the one that swept it was on NQ, right? Yeah. So after 9 o'clock, well, even before 9 o'clock, but after 9 o'clock, we started to accumulate orders. We were accumulating orders. And then around our 9:30 Judas time, we get a sweep of the low. We get a sweep of the low, as y'all can see right here. Turtle soup sweep of the low into a key level, which also almost filled. It failed to fill equilibrium, but ES did, which we had a smart money SMT. We had an SMT, and price continued higher. As y'all can see, that would have been the turtle soup accumulation, manipulation, distribution. If we were to also take it into a range, right? We had our 15-minute range of NFP. You don't have to wait for the swing low to get hit every time, right? If it's less likely that price is going to go to this data low, we would want to buy in either Q2 or Q3 of the quadrant. So if we get a sweep, an accumulation manipulation, right? Accumulation, 9:30 manipulation, distribution of a ranges quadrant, and we're buying in a discount of that quadrant to continue higher, that's acceptable as well, right? So that's just one example. And the reason why I'm always going to take this turtle soup, I wouldn't have taken this turtle soup if there was no SMT. There was an SMT and there has to be an SMT. You don't need an SMT, but for me, one of my rules is there has to be an SMT in order for me to take that trade, right? So smart money, what I take an SMT for is that smart money is in alignment with my trade. It is now time for my trade to go and reverse, right? So we had smart money. Most people think it's smart money technique. I personally think it's smart money time. I got this from Rich the Bull. And when I see a SMT, it shows that time is aligning with my position, right? And you get higher confidence, of course, when it's in that macro, but macro didn't really do much. Outside that macro, 9:30 Judas. If we were to mark what? 9 o'clock's open. Where are we? Below the open. So that's how I trade it. I'm going to trade, we're below the open, right? Into a key level, sweeping the low, into discount of the range. That's enough for me to buy. I buy, I take my position off at the high that broke the low, right? Because if I'm wrong, I still take partials and I can be correct. So that's just one example. I'm gonna see if I can find more examples. I of course have examples shown live, but those are usually the ways that I'm trading my soups. If there's not an SMT with the soup, I'm not taking it. So if we were to look here, right? If I were to go onto ES and show you guys where ES was, ES around this time, it didn't take that low. As y'all can see, it left this low and it didn't even get to reach these lows. ES rebalanced to an equilibrium and Q failed to rebalance the equilibrium, which showed that it was a stronger asset. And then we went higher. So that's really what I was starting to look at. And that's why I was starting to pay attention to. And of course, I wasn't able to take the trade because my MacBook was broken. But that's just some stuff to pay attention to. I'm pretty sure there's another example again of that happening, the accumulation, manipulation, distribution in yesterday's price action as well. But now I'm gonna show more live examples, right? But just ways I will also enter off, which I will make another video on next week, how I enter off and manage my positions. I enter off of 4 things, either an order block, right? Which I can just show you guys right now. An order block would be, for instance, right, on NQ. Let me show an example. An order block would be, you see how we get this thick down close candle? The order block would technically be right here, but we never get a retrace of that order block. If I enter off an order block, a high time frame for value gap, change the state of delivery or inversion. So one thing to also pay attention to when you're looking at my turtle soups and how I trade my turtle soups is if there's a close below the low, right? If there's a close below the low, it shows that, oh, we have officially taken it. And the way I like to see it as, if we were to remove the wicks off the candle, did the body close below the line that we have drawn out as our liquidity? If not, then it basically didn't take it. I'm always going to take a thick down close candle below, and then once we get a close back above, confirming a change in state of delivery, a change in state of order flow is when I'm going to take that trade, right? So now we can get into the me basically just calling this live. So it's not hindsight, because I understand if you say hindsight, I can understand, oh, this is cherry picked, but I'm going to show basically me calling it live. So I have a few examples here because I haven't been doing calling it live for a bit, but this is how I basically trade it, right? So right here, as you can see, I had marked out today at 8:50. Oh, not today. It was the 3rd. It was the 27th of March. And I said, hey, this is what I'm looking at. Is anybody looking at these? I want the range high swept, right, to go to the range low. I typed that earlier, but I couldn't find it. And I didn't take this trade only because I was on vacation. I was on vacation. I had no internet. I was at the beach. But like I said, right, range high, we're going to go to range low. Everything aligned up perfectly. And then I literally told, and it says, hey, I was paper long. Good looks on that one. I think I was married to a bias, right? But I called this earlier and I was like, it's going to go to range high to the range low. And if I were to show you guys actually, right, that specific day, let's see here. If I were to go on the 15-minute, right? Yeah, this one right here. You can see everything aligned up perfectly. We were in this range, 15-minute range, with the range high right here, the range low right here, right? And we were accumulating. If we were to go look from here to here, it's in a premium. Always want to sell in a premium. High time frame, right? There's a high time frame PD array right here, and our PD array right here. Where would you enter off of, right? Well, it's not going to show there, but you would have entered off of a CISD. I'm not going to show that, but I had that marked out, right? And I told them, hey, this is what I'm looking at. This is what you guys should look at. That, right? Now, this is just me basically breaking down that price action later. And you can see it was perfect, 9:30, forming it. It was the specific time in which a Judas should occur, manipulating, taking out those buy stops before continuing lower. And we were above also midnight open. All right, so you're just stacking up confluences here. Those opening prices are important, and that's how I usually trade it. Now, here, like I said, we had scenario A. Scenario A is range high swept to range low. And I said this scenario has a high possibility to have an SMT with ES, and that's higher confluence, where it could not even reach equilibrium. It could not reach the mitigation block. It couldn't reach. All it needed to do is tap into that fair value gap before continuing lower if ES goes and takes it. And as you can see, we had the SMT with ES, which we took, and it did continue to go lower. Did it go all the way low? But like I said, it reached equilibrium of the range again, which is really all you need. You should have taken profits there, and that would have been a winning trade. Another one, this was just yesterday. I said, hey, this is what I'm looking at, right? 1 hour CB and 1 hour and 15-minute CB tapped. I want to see this hit, Bitcoin range taken high on the 1 hour. And then I said, this is when it continued to trade it lower. People were talking, I was like, for pattern's sake, I don't want to see this unfilled, right? So I actually wanted to put 6 coins on the play, and price never ended up filling me. Like I said here, I don't know, it was a glitch with TradingView. I don't know, don't mind what that guy said, but it was a glitch with TradingView, and I never got entered. But as you can see, this profited at least a 123R, right? It was a very nice trade. I entered off of it. I would have entered off a 30-second inversion, not change the state of delivery, but a 30-second order block play, because the change of state of delivery, as you can see, was right here, and that's way too deep. I would have waited for a retrace. So another one right here, I said no wish to think for it, but we could have a potential macro sweep. This is what I'm looking at, right? And I showed, and I said, these are my conditions. Nice, simple. If they don't happen, then I'm done for the day. If range low is swept, then I am done for the day. This is all I wanted. And I set conditions for myself. And then I have actually the live executions of these so I can show you guys. But this is what happened for the, for this one. Price did end up going, but like we said, it was the end of the macro. It was towards the end of the session, so it was pretty low probability. Call this one out as well. As you can see, it was happening, but these are all just soups, and we're gonna get into some Twitter examples. Now we're gonna break down some live executions, right? So right here, this was, I think, yesterday or Friday. It was either Friday or Thursday. It was April 3rd. And I said, hey, range low, 2-hour imbalance, which is also a turtle soup unicorn entry to all-time highs. First, what's it called? Profit taken at half. Then you have range high, first standard deviation. We have all our opening prices marked out, right? This is what I put. And price continued. We had a premature exit just because of the volume imbalance that was in equilibrium of the range, but it respected the VC well and entered OTE while sweeping 15-second equal lows. Stop to break even. As you can see, consistency rule for top step. I would have gotten out right here, but this is basically sloppy, so I can show you guys the live execution of me taking it, right? So actually, let me see. I have it on a clear video right here. Range low swept. I said looking for a thick candle to displace below these equal lows, which is a 2-hour imbalance for, unicorn entry. So we continue to get that. We continue to go lower. We had our standard deviation retracement marked out for a potential retracement zone. I said prices in a range, and we're gonna see. Oh, I had my food. CASD here, right? Perfectly respected this. What was it? 1 minute BC on the right, on the left of us. We already swept lows, entered the 2-hour imbalance, change the state of delivery here, inversion for value gap entry. So that's basically what we were waiting for. I didn't enter off of that because it respected it, but I did want to see a retrace into there. We get entered, and price goes. And like I said, 8 o'clock would always inject volatility for Asia. Asia shouldn't inject volatility for gold. Don't ask why. As soon as 8 o'clock hits, of course, we get that volatility. Do your research on that. And I said partial at the volume imbalance, right? Because you always want to take a partial near equilibrium of the range. So I was expecting it to really go in here. We had our 4-hour open, low, high, close. So we were, buying below 4-hour open, buying below 2 market session open, buying below 6 o'clock open, buying below 7 o'clock open. We had all of these confluences that stacked up, range low taken into a balance. So that's why we were able to catch, a decent move. And then price basically consolidated. Like I said, it's Asia, so it won't be the cleanest, but it still works in the end. I get stopped at break even. But as you can see, price did in fact continue higher towards first standard deviation as your final TP for the final target. Now this one here, we have NQ and ES. I want 3-0 for the day. Turtle soup inversion for value gap and open high low close. This is one of the trades that I said I called out. This is another trade I said I called out. We have a live execution here, which is what I'm gonna break down. I think this was, oh yeah. So this is the one that was big candles. Range low was taken. Range high was taken. SMT, right? As y'all can see here, we had an SMT. We said, okay, we're gonna enter off of here. Potential SMT with YM. Order block validated, which is a potential pyramid entry, right? And we had our stop just above this imbalance, right? So we didn't want to see it trade above the imbalance. We had an SMT with YM. Price finally decided to close below, indicating a change in state of delivery. So we should see lower prices. And price, of course, starts to drop, like we said. So we had a sell limit if price comes back there, right? like we said, pyramid entry, want to close below these lows. And I want you guys to notice how price fails to close above these highs. Tap into this order block, which is a great indication. Now, fair value gap inverse just equals lower prices, right? Stop goes immediately to the turtle soup, and that is now a protected high, also an intermediate term high. And I said for value gap inverse equals, right, big gray candles. I don't know why the quality is so bad on this, but this is basically how I'm managing the trade. And price continues to go down, but we eventually lose volatility toward the end, as y'all can see, and then we just go and close the trade manually. Another one right here, we said go warm-ups. We had, SMT. Why is the photo quality so bad? But we said I don't take unless I have a good setup, right? Then I sent this picture right here, SMT with one of them, and we did in fact have an SMT. And then we of course protected high. We entered at the order block, another pyramid entry, got out right at this low, and then we got out finally right here, right? Another one right here, I believe range high was taken. I'm gonna take that music off because of copyright. Range low taken, respecting, consequent encroachment of the 15-minute BC. We get this right here. Want velocity above this high. This is where stop would be to break even, but usually just do it at the equilibrium of the range if the low that broke the high or the high that broke the low is a little too close to equilibrium, right? So we have this right here. Price continues, takes our partial, stop to break even, officially risk-free. That was the range high. We had our standard deviations marked out as well, right? Price continued to go higher, inversing that fair value gap. But we closed early because price was just, it was near the end of the day. Finally, the last example right here, right? We have stop to break even at the low that broke the high. Range low was taken right here. We entered off of an inversion, although we could have entered way below here and got a better entry. But we put our stop at break even, and then we eventually closed because we got an SMT, which was a premature close because price did in fact go up higher. And then our final one, as you can see, I was bored before FOMC. We had our range high souped right here. We had our range low, and we bought here, sold here, then sold, bought. It was just a whole bunch of stuff, right? But usually I do these, I call it every day in some Discord, whether it's Kiowa's Discord, whether it's the Discord with Zay, which I'm going to post the link to in the description. That's what I'm going to be the most active on. Or it's PJ's Discord. I call all these live. Let me know how I did. Let me know anything I could improve on. Let me know if there's anything you guys would want me to expand on. But this is basically how I trade my turtle soups. Like I said, we either have a range, a market maker model, accumulation, manipulation, distribution, or just anything of that like. And that's pretty much it.